Welcome to the second video for Module 1. Here we're diving into Excel, your most powerful case analysis tool. We're going to turn that spreadsheet into your best friend, or at least in something that doesn't make you panic when you open it. In this course, Excel isn't just math software, it's your analytical stage. It's where your thinking becomes visible. The Buffett case you're working on uses Excel to demonstrate value creation. Things like ROIC, EVA, and WACC. So mastering structure, clarity, and presentation is essential. And remember, neat, logical spreadsheets don't just earn points, they earn respect out in the real world. The Buffett template that you're using has several tabs that follow the same logic professionals use in corporate finance. So let's get familiar with the layout. Executive summary. This is your high-level dashboard. This is where your final ROIC, EVA, and value creation results appear. In the inputs and assumptions sheet, this is your foundation. You'll enter the financial data and key assumptions here. Think WACC inputs, tax rate, cost of equity, etc. In financial analysis, this is where you'll calculate ratios, margins, and performance metrics. And in value creation, this is the heart of the case. This is where you'll bring it all together. The NOPAT, the invested capital, the WACC, to measure your economic value added, your EVA. You'll add any supporting data, any raw data, notes, or case references you use to back up your calculations. You can use Control+, page up, or page down to move between those tabs pretty quickly. And this will help you navigate efficiently. It helps you think like an analyst instead of a spreadsheet tourist. And if you ever get lost in your workbook, don't panic. Just remember, Control+Z is your best friend. Here's why Excel matters so much, both in this course and in your career. Investment bankers spend 12 or more hours a day in Excel. Private equity professionals literally model deals in it. My son, who has a master's in finance, his whole job centers around using Excel on a daily basis. CFOs make board decisions based on Excel outputs. Now, in our class, this is 40% of your grade, and this comes from the quality of your Excel spreadsheets. And that includes structure, clarity, labeling, formatting, correctness, the things that you're learning right now. So if your spreadsheet looks professional and logical, your analysis automatically feels more credible. And that's how the real world works. Even tiny Excel errors can have massive real-world consequences, from lost millions to flawed government policy. So the $15 million typo, JP Morgan's London whale, this is one of the most infamous trading disasters in history. A small Excel error in a risk model contributed to billions in trading losses. A single formula copied incorrectly overstated risk exposure and skewed decision-making. Takeaway here is even a simple spreadsheet can sink a global bank if it's not checked carefully. Now, in the Harvard economists Reinhart and Rogoff, two famous economists published a study suggesting that countries with high debt to GDP ratios experience slower growth. Policymakers around the world used this to research to justify austerity measures. Then a graduate student discovered a basic Excel range error. They accidentally left out several countries from the calculation. The result? Years of policy debate based on one Excel mistake. And this last one, the student classic, is going to hit a little closer to home. Every semester, someone submits their case analysis with half their spreadsheet showing pound REF errors, usually because they deleted a row or copied formulas incorrectly. The moral of this story, Excel isn't forgiving. Once a link breaks, the logic chain collapses. Now, the point here is not to scare you. It's to show you how powerful and dangerous spreadsheets can be. Your best protection is professional discipline from day one. Keep your work organized. Double check your formulas. Avoid hard coding numbers. And always use color coding and version control. Because in finance, accuracy is credibility, and credibility is everything. Now, in your Buffett model, color is your secret weapon. The standard we use is blue for inputs, those typed values, gray for your calculations, green for outputs, and red for error checks or alerts. So when you open the value creation sheet, you'll see this color system has already been applied. That way, if someone opens your workbook cold, they should be able to tell what's editable just by the color. Let's walk through how your Buffett workbook flows logically. The executive summary, this tab tells the story. Does Berkshire create value? Inputs and assumptions, that tab is where you record all of your data, your WACC inputs, your tax rates, etc. Your financial analysis, where you compute things like ROE, net margin, asset turnover. In your value creation tab, you're going to integrate those metrics into the EVA and ROIC framework. And then in your supporting data, that's any reference data or background info from the case. You will follow this order when you build and explain your analysis. It mirrors how professional valuation reports are structured. And I want to say one more thing about the executive summary sheet in your template. This is the first thing that your boss will see. This is the first thing that I grade. Make it crisp and professional. Summarize your findings here, the ROIC trend, rising, falling, etc. The EVA values over time, your WACC assumptions. And so your goal is to make someone understand your key message in 30 seconds without scrolling. So for example, if your ROIC is consistently above your WACC, that's value creation. A green arrow up or a positive EVA line instantly tells that story visually. Data entry is where most case models go wrong. It's the garbage in, garbage out problem. So in the Buffett template, when you open the inputs and assumptions sheet, this is your data headquarters. Here you'll be entering conceptually your historical financial data, for example, your revenues, your expenses, your total assets, your equity, your tax rate and market assumptions for WACC, your growth rates or return expectations. Every number should have a reason. So if you enter a 9% WACC, know where it comes from, like the Buffett case readings that discuss Berkshire's cost of capital and the low leverage profile. So for example, if Berkshire Hathaway's after-tax cost of debt is 3.5% and its equity cost is 8%, with a 20% debt financing, your weighted average will fall around 7%. That's the kind of logic that I'm looking for. This is what I expect to see in your Excel inputs. Data entry is where most case models go wrong. In your value creation tab, this is where the core formulas connect. The ROIC is going to test your operating performance. Your WACC represents your opportunity cost. And your EVA measures true value creation. So conceptually, if ROIC is greater than WACC, value is created. If your ROIC is less than your WACC, value is destroyed. In the Buffett model, you'll likely find Berkshire consistently earns ROIC above the WACC. And this is one of the reasons Buffett's strategy focuses on durable, capital-efficient businesses. Now, nothing kills credibility faster than broken formulas or chaotic layouts. And so before you finish, run what I like to call a sanity check. Are there any pound REF exclamation point or pound value exclamation point errors? Do your totals reconcile? Remember the accounting statement, financial equation, assets equal liability plus equity. Do your totals reconcile here? Are your numbers consistently formatted, either with a dollar sign or percent or decimals? Are the charts labeled and clear? Now in the Buffett file, these habits are already built in, but you'll want to double check in your edits. If you've linked sheets in the supplemental data, ensure every reference still works after you copy that data. Remember that a clean file communicates professionalism before you even say a word. Your spreadsheet should be presentation ready. That means when your instructor opens it, it looks something like that, could go straight to a CFO. Clean borders, alignment, readable charts, consistent color usage in all matter. This is for clarity. For example, if you graph EVA across 5 years and it shows consistent growth, you've just turned a data table into a powerful story about Berkshire's value creation. Your mission is simple. Bring professional structure and clarity to your Buffett case model. Remember the 5 Excel standards: clear coding, clear formulas, consistent formatting, documentation, and quality control. Together, all of these define your analytical credibility. You can use this quality control checklist before you submit to ensure you've double-checked everything and it looks good for submission.